Welcome back for another episode of Strive for 25. Joel Farrell here, and looking forward to sharing with you our guest
Welcome to another episode of the Strive for 25 podcast. And I've got an amazing guest today, Joseph Cacciapaglia, and he is a real estate agent and investor in the San Antonio, Texas area. And really pumped to be able to have him on and dig into what he does in his market. And this guy is our hoot on social media. So Joseph, thanks again for having coming on today.
Thanks for having me. I appreciate it.
So give our listeners a little bit of an idea of kind of what you do and what's going on in your world.
Okay. Currently, I'm the team leader of the investment team at PMI Birdie Properties. We're really a full service investor focused real estate firm. I work as an agent selling typically anything residential investment properties, and that might be anything from a single family home that someone's going to use as an STR to we max out somewhere around 25, 30, 40 units multifamily. So sort of bridge that gap. I know a lot of people stop at 5 because that's where it's technically commercial. But I find for clients and the service that we provide, it makes sense to go straight through there right up until you get to 25, 30 units.
So we're just going to dig right into the markets right now.
Sure.
As a realtor working with investors, I have my own opinions on the markets. I've been talking about this for a while, but what are you seeing right now in the markets in terms of if I'm an investor or an aspiring home purchaser, what can someone expect to see in this market?
So it's interesting. There's obviously rates are very high right now relative to what they were just a year ago, although they're pretty close to what they were when I started investing back in 2005. And so that's perspective, I think, helps a little bit. I think historically, since I've been here, most of what I've done is help investors buy properties. Over the last 6 to 8 months, I've helped just as many exit as to purchase. I mean, right now, there's a lot of investors that are sitting on a lot of equity, and it makes sense for them to sell. They think that maybe their short-term view is that they're not going to get a whole bunch more appreciation. And San Antonio is really a growth market. People come here for rent growth and appreciation. And so a lot of investors have been cashing out right now. The people that are still buying, they're mostly switching to, I've got really a couple of different sets of clients. I've got a set that they're looking for a place to put their money. They're sort of high net worth, high income tech workers that are trying to buy something here. They might just buy fourplexes or duplexes, new construction. And a lot of them are buying all cash, and they're not terribly concerned about their rent to price ratios. There's not a whole bunch of those people left today, but that's who had been buying right into rates continuing to climb. And then the other side, we've done a whole bunch of short-term rentals lately. Here in San Antonio, they still cash flow pretty well. You have to buy a big home with a pool, 4 or 5 bedrooms. Or something that's just really well located. So those are the two groups that are buying today. But I would say, a good portion of my client base, they're selling at the moment. They're thinking that there might be some better opportunities down the road, and so they're going to sell some properties. Some of them are trading up, a lot of them aren't. The third opportunity that I've seen, and this is what I've been doing quite a bit of, or a little bit of personally, is buying properties and then all cash and then selling with owner financing. That creates an opportunity today because you can get you can get a good rate of return where you're not it's a little bit different investment than holding something that potentially is going to lose some value. I don't know that I'm really on that boat. I try to never make predictions. I started in real estate. I bought my first property as an investment in 2005, but I really started trying to buy stuff as far back as 2003 and started following markets. And what I've realized is it just doesn't make sense to try to predict what's going to happen. You just have to react to what the market's giving you today, figure out where those deals are today, and try to structure deals so that right now, I think that there's more downside risk in the near term, and so looking at deals that are somehow protected from that makes a lot of sense.
Yeah, I think that would be really, really, I think helpful for listeners out there to maybe dig into an example or two on that. And for the listeners out there that want to be able to find you on social media, where can they find you on social media?
So the only social media I'm really active on is Twitter. You can find me as 𝐂𝐎𝐍𝐍𝐄𝐓 on Twitter. So, I don't know if you want me to spell that, but
Yeah, they're gonna see it on the
okay.
on the episode. So.
I spend a little bit of time on Bigger Pockets too. I think, I used to get a ton of clients from there. So that's, just real estate social media, I think of it as, on their forums. But I don't know. I most of the time I try to just focus on one thing at a time. And so Twitter is really where I spend all my time. I mean, you can find me by the same name on Joseph Cacciapaglia. If you search that, you'll find me on LinkedIn. You'll find me on Facebook. I've got a YouTube page, although that's mostly just content about a shipping container home build that has gone terribly awry over the past couple of years. But yeah, I mean, I use my name everywhere, and it's relatively unique. There's 2 or 3 other Joseph Cacciapaglias, but I wear the same shirt in most pictures. So.
Yeah, I mean, I'm just so excited to have you on because, I found we connected on Twitter, and you're very active. And I mentioned the hoot, like you just have a interesting way of looking at things that's very logical, bring in your humor, and sometimes call people on their bullshit. I mean, so it's just a great mix. I love following you, and those who are out there that want to follow, check it out. He's very active and does a good job of really kind of educating.
Thanks, I appreciate
and whatnot. Yeah. And I want to save my question. So I saw your posts, a few posts recently about the seller financing. So I wanted to kind of reserve them for this time slot that we have.
Okay.
So you mentioned buy cash and then seller finance it. And then also, maybe as a hedge to minimize some downside short-term risk, right? So can you unpack that a little bit and kind of explain more detail? What would be an example of something like that?
Yeah, so I've done this mostly with vacant land at this point. Although I've got my first one that's a home that I'm trying to do, and I think so. There's a couple. There's definitely it's something that if you do it, you need to get an attorney involved. You need to check with your CPA. I've noticed there's different, there's federal rules about it, but there's also different state laws that this might not work everywhere. I know. So I've invested in several different states. I know if I did this in New Jersey, it would be more cumbersome than doing it here in Texas. I don't know. I'm a former attorney, so you're always going to get a disclaimer from me before I give any advice, right? And I'm sorry about that. So a good example, I bought a piece of land, and you can do this with really cheap lots. The first one I bought for $11,000. Little tiny lot. It was not the best part of town. It was zoned multifamily, but was so small you could only put 1 unit on it. It had sat, I bought this a couple years ago, when it was really booming time still, but it had sat on the market for a long time because people didn't realize you could build on it. I mean, it looked like a parking space. I actually have this one, I think, is my pinned post on Twitter, so you can see pictures of it. It is, I just bought it all cash. I had negotiated. It would have been listed higher, but it had been up there for so long. The listing was terrible. It didn't tell you what you could do with the site. Most people that called on the sign thought it was the yard, the home next to it, and that they had just put the sign a little bit, to the side of the yard. I bought that. That one I actually had held on to a little bit because, I didn't instantly list it because I had thought I was going to build a tiny home on it. So I sort of backed into this accidentally, but this was my first one. And I think it's a good example of what anyone can really do, though. I got a architect on Upwork to just put together renderings for it. I didn't do like full plans or anything, but something that fit on the lot that looked reasonable, which it was, a small home, but I think it was a 3-2. Listed it for sale and, advertised that it was owner financing. I only wanted $5,000 down. I think that one I listed it for 25,000, asked for $5,000 down, offered to hold a 10-year note at 9% interest. And so the payment on it was like $230 or something. And I put that all in the listing. I put the rendering of what you could do there, made it clear that, why the zoning allowed you to build on it when it looked like you couldn't. And, just started taking offers on it. And within that one, within a week or two, and I think it was hurt because it had been listed so many other times recently, But within a week or two, I started getting offers. I settled on somebody paid me $23,000, gave me a $5,000 down payment, and started making monthly payments. The title company had in Texas, we're really fortunate. Our forms have there's a seller financing addendum that just comes with our forms. I know not everywhere does the form, do the form contracts have that, but TREC puts together one that's really straightforward. The title company did the paperwork for me. Um, you know, I had to come up with how I'd make my own monthly statements, but I just did that in Excel. Did a amortization schedule, and so I send them. Every time they give me a payment, then I just send them an updated schedule that shows them what payments are received, what their principal balance is, and all that. That one was bought by a builder who just wanted to not put all their cash down until they had their plans put together. So they paid me off. I want to say they only made 4 or 5 payments, and then they paid me off in full. And so, because if I had held that to maturity, because I'm getting a big premium for selling it with the owner financing. I mean, that's why people will pay. That's why I basically doubled it in a short period of time. I think part of it's from my better marketing, part of it is from the renderings, but I think the main thing is the low down payment, easy monthly payment financing is what gets people to buy those. And even so by having him pay off early, it juiced my returns a ton. If you look at my IRR, it's over 80% on that one. Where if he had held it for the 10 years, it was going to be like 26%, which I'm still very happy with that. And I've replicated that a few times now. But that, in a nutshell is how it goes. I think a couple of things that, you're basically, when you're holding that note, you're playing the role of a mortgage servicer. I don't know if you noticed, I've really done a little bit of everything in real estate, and I did actually work as a servicer for 6 or 7 months in 2009. It was all commercial loans, but so it sort of helped me, understand. And it's something that you'll need to ask your attorney about, is like collection rules and what I can and can't do. I do have one right now where he's late every month, but never to the point of default. And so it's just like having a tenant, or sort of like having a tenant, where you can get late payment, but every time I get to the point where he's late, I send him a text and he instantly deposits. So he just doesn't remember, and for some reason the email doesn't get him. But whenever I text him, it works. So I feel like in general, you get borrowers, or they have more on the line than a tenant, so they're a little bit easier to collect from, in my experience so far. But it is, it's very passive. If he doesn't make a payment, I don't have a mortgage that I have to pay. I don't have taxes I have to pay, or insurance. And so that's one of the things I really like about the strategy is there's income, but there's no associated expense on my side, right? So I could have all of my notes not pay, and I just don't get paid that month, but there's nobody that I have to turn around and pay, which makes it, in my mind, a much lower risk opportunity, at least once you've turned it into a note. And so for me, I really like this strategy because there's potential for really big returns because of the flipping part of it. And you're taking a lot of risk in that short window. But once you get past that, you've locked in your returns, and there's always a situation where they could not pay and you have to take the property back. And in an instance where property values have gone down, it could be a problem. A lot of things have to go wrong before you get there. And the other thing that I like about it is you can survive forever, and wait to foreclose. You're not bleeding payments every month while you're waiting to take that property back.
I have a question for you.
Oh, go ahead. I'm sorry. I will ramble forever if you don't stop me. So please feel free to jump in.
So putting on my mortgage hat, so thinking if they do default, go past 30 days late or whatever,
Yep.
On the mortgage side, they're going to ding you with a 30-day late on your credit because they pulled all your information, pulled your credit report, they have all that stuff. So when you are doing this process up front, do you have their social security information to be able to hit their credit if they're late?
So I do have it. I didn't on my first one. I didn't. It wasn't like my first one. I really fell into it, right?
Mhm.
And it worked out, and I've sort of gotten that process. But now I do have a buyer information form that I have them fill out. Um, I'm not currently doing a credit check or anything like that because of the nature of the properties. You know, they're not. This isn't like a homeowner buying a piece of land to live, you know, or buying a home to live on. And so I'm looking at that they have some liquidity. I think that's more important for, you know, if they're going to try to execute the business plan of building on it sometime in the future. But I realized the first time I had to send out the 1098 interest statements that I needed everybody's social. So I hadn't collected that up front. I didn't think about it. Um, but so it is something I could certainly ding their credit. You know, the foreclosure process in Texas is relatively short and easy, especially, you know, there's no sort of, you know, this isn't, there's no homestead protection or anything because this is going to be vacant, or so far it's all vacant land. And so, you know, I'm not really worried too much about dinging their credit. I mean, I think honestly, I think if for most of them, I'd try to do a deed in lieu of foreclosure. I'd be like, hey, let me give you $1,000 or a couple $1,000 and take it back from you.
Yeah.
You know, I'm very confident anything that I've sold so far that I could resell, uh, probably for more than
Yeah.
what they've been over the last couple of years. That might not be true going forward, although I think it will be because you know, there's opportunities to get stuff super cheap right now for the sellers that aren't willing to carry. They're just having to take pretty big discounts to move their land today.
From a property tax standpoint, that who's taking on the property taxes during that time frame?
So
The new buyer, right?
the buyer has to pay the property taxes.
Okay.
I have, you know, it's really easy where we are in our county to check on them and make sure that they're paid. You know, one of them that I had this year, you know, hadn't paid by the deadline. Again, I reminded him and it was paid within a week. You know, we have the opportunity to where I could go and pay those taxes and add them to their loan. Yet your loan documents obviously have to give you that ability to do so. And you know, most of these are relatively cheap. Although I've been slowly ratcheting up the price points, but so the taxes on them aren't a ton of money, you know, and so some of them are, you know, one of them like the one that was late, and I was thinking about, hey, it was only $800 for the year, you know, so it's not a lot of money. It would be easy for me to do that, tack it on if I had to, but you know, I reminded him it was paid pretty shortly thereafter.
Gotcha. So the actual transfer of deed, because again, the listeners out there may not be very familiar with seller
Mhm.
financing or subject to
Right.
the deed that actually transfers when.
So what I'm actually doing is it's a real sale with a vendee lien, and so when it looks like a normal sale to the buyer, right? Like we do, you know, I list it on the MLS, it gets sold, we go to a title company, the day of closing, they get a deed, but it has a reservation of, you know, it's called a vendee's lien or a vendor's lien, sorry. And so, and then part of that transaction, there's also a note that they sign, and there is a deed of trust here. And in a lot of places, it's actually going to be a mortgage. Um, and so those documents are all signed at closing. It's the paperwork looks just like if they used a regular mortgage, except that the deed itself references the vendor's lien.
Boom.
And so they own it, but it is, you know, subject to the lien that I'm putting on it at closing.
So skipping kind of to present day, you
Mm-hmm.
mentioned maybe even doing one with a home and not just land.
Right.
But in this market right now, you know, what's going to be available is going to be obviously probably different than what was available 2 years ago or 3 years ago or
Right.
whatnot. Do you want to share like an example of the last deal you did in terms of price range and you know scope?
Um,
You don't have to if you don't want to. I don't want to put you.
yeah, so I have one that's in process, and I don't really want to talk too much about that. It is also with someone on Twitter. So there's a good chance they'll see this if post this. You know,
Well,
I did one not too long ago that was another small lot.
okay.
and I think I told you a little bit about this. I find that the most and one of the easiest steps towards asset protection is anonymity and remaining anonymous. And obviously I don't do that. I put my own personal stuff out there. But so what I do is I try to only pick a few transactions that I talk about quite a bit. And like I never disclose like my assets under management or doors
Yeah.
or I used to get really into that, and when I first started, and uh, I was all proud of like when I hit 14 doors when I was like I don't know 2 or 3 years in, and I realized like it's just to me I don't want people to know, and so now I really try to pick like a couple at a time that I'll talk about. Obviously that first land deal I think was a good one because I really fell into it accidentally. Another one that and I have shared this, but it's more recent. It was another small piece of land I bought. It had been listed, and this was actually, it was still last year, so not in the last few months. The only one I have going on that's really current is one that's a home. Um, but the it was another one it was just a strange lot. It was a triangular lot. Uh, it was a triangular lot with a deed restriction that gave it like a huge setback, like it was a 35-foot setback. And when you do
Oh,
that
wow.
on a triangle, uh it seemed like you just couldn't build anything. I mean, I actually spent time with an architect on that one, and he made a really cool like it wasn't a triangular building, but it was like with a big rectangle and then a smaller square to sort of fit into it, and it was 2 stories. And even with doing that, it was still less than 1,500 square feet. So it was a pretty small home that you could fit on it. It had been listed from an out of state agent that honestly, the listing just looked like a scam. Like it with the title company they were trying to use, they actually just mistyped what it was, and it basically made it look like they were trying to make you just send money to like some weird company that wasn't a title company, and it was just they put the wrong thing in there.
Yeah.
But so even though land was still selling pretty good at that time, I mean it wasn't amazing. That one sat, and it was super. They had offered asking I think 22,000. So I mean these are all I'm trying to do a lot of little lots. I think getting gives you a lot of diversification, right? If you can just do a bunch of little ones and they're easy. But anyway, I got that under contract. I think I had negotiated like they really liked what they had, even though their listing was terrible. And I got it under contract for like 21,000. And then as time went on, that one actually the closing got pushed back a few times because there were a couple issues that came up in title. It wasn't until then actually that uh, the how far the setback, there was some discrepancy of whether it was a 35-foot setback or 20. And so once we got to the part in the title where we really like we're looking at that easement and realized how big it was, I went back and renegotiated another $4,000 off. We bought that for 17. I say we, I don't know why. It's my company, but I'm the only owner.
Right.
I'm so used to saying we because at my agent job, it's me, and then we have the management team and everything like that. But so that one ended up closing it at 17,000. That one had like some, I had to remove some trash and pulled some brush out and stuff to make it look a little bit nicer. I had paid an architect to make, what I thought ended up being like a really cool little home that would fit on there. And then I had offers within a couple of days on that one. I sold it for 35,000 with 5,000 down. Um, you
And
know,
you owned it how long?
I mean, from the time it closed until I listed it, it was probably 2 weeks because I spent some money to get it cleaned up.
Yeah.
Yeah, so I mean, like it was a double, and just to cut, just 100% because of the financing. The guy who bought it from me, I actually talked to him, and he had thought about buying it at when I bought it, but he didn't have $22,000 to spend on it. But he had 5,000 to put down, and then he's paying me it's like $380 a month or something is the fully amortizing payment. So if he holds that to maturity, it's somewhere in the mid-teens return. But if he pays it off early, it's, you know, it's a double on what I paid for it. And you know, one of the things too, if I wanted to be a little more transactional about it, since I've started creating notes, there's a whole bunch of companies that like cold call me and send me direct mail about wanting to buy my notes. I haven't gone down that path yet, but I'm sure that at some point I will. And it seems to me that when, you know, where my all in on that $17,000 one, it was, I had less than 20,000 into it and sold it for 35, have a $30,000 note. I could probably sell that as a discount and get more cash out of it. But for me, I'm trying to create these, you know, these income streams that are, I don't think there's anything more passive than just, you know, except for sometimes I got to text the guy and remind him. But you know, it's a great income stream for a small amount of money, right? Like I put less than $20,000 down, I'm getting $380 a month in pure cash flow. You know, some of that is paying back the principal and some of that's interest. So you know, the tax treatment isn't as great, but you know, these little deals just make a ton of sense. I think as the bigger one with the home that I'm doing, obviously I'm not getting doubles on those, but it is a pretty good premium for providing the financing. It's one that I'll be selling. I'm hesitant to get too far down that road because there's there's a lot more consumer protections that just make more hoops to jump through when you're selling a home to a homeowner. So like that one is one that's being sold to an investor who's going to use it as a short-term rental.
Can I stop you real quick?
Yeah, go right ahead.
So one of the things, you know, that's going through my brain is, you know, geographically speaking in San Antonio, right? You've got several military bases in the area. Lackland, I do believe. Lackland?
Yeah, we've got Lackland, Randolph, you know, Fort Sam Houston, Camp Bullis is by, yeah, tons of military. 11% veterans here versus 11%. Like 7 in Texas. So.
What quadrant are some of these land deals you're picking up?
So they are almost all either just east of downtown or just west of downtown.
Okay.
Yeah, I mean, almost all. And so there's, you know, we have a lot of flood zones where some of the cheapest stuff is. So like you'll see a lot of like $15,000 and $20,000 lots that I just won't touch because they're in a flood zone.
Mm-hmm.
And you know, even though I've gotten a couple really cheap ones, you know, I've bought ones for 40 or, you know, 40 or 50, like that's, but it's pretty easy to find them in that, you know, sub 50 range. And I find that's where buyers are more likely to need financing than when you get up to, you know, if you know, I sold some lots for clients that are like, you know, $180,000 and you can find a bank that's going to finance those for you. But if you have these like sub 50 ones, you know, most of the people that want to buy those, you know, either they don't have great banking relationships or the banks just don't want to make these little loans, especially for someone who's buying it and doesn't have the plan to develop it just yet.
Yeah. I mean, that's something that, you know, me personally, that's something that we're going through right now. On the commercial lending side, we've got a plot of land in Florida that, you know, we're waiting on some utilities to go in and, you know, restructuring financing. And a lot of banks don't want to touch land. They want something that's, you know, shovel ready within 60 days. And so a lot of companies are just not offering what they used to a couple of years back. The building process, and maybe you know some insights, maybe you don't, but from, you know, what you've seen, someone purchases a plot of land. Let's say they have a pretty good idea what they want to build. Just say it's a single family house. What kind of expectation would somebody have to be able to get it from purchase to plans and specs to getting it approved with the county and then getting it built?
So if it's their first one, I'd count on it taking a long time. My first ground up build here in San Antonio has been it's about to be done and it's been a 2-year project. It was made out of shipping container homes and it's on an irregular lot, and so that definitely added a lot of time. But I know another young developer who's working on his 4th or 5th home where his first one he built downtown or very close to the area where I'm selling these lots. And it took him 18 months from the time he closed on it to build. And, you know, I feel like he really had his stuff together. He thought he really knew what was going on. And so it is, obviously if you hire an experienced builder to build on the lot for you, it's one thing. But if you're like going to actually go out and hire the contractors and you're sort of acting as the builder, it is it's a little bit tough to navigate with the city, right? I mean, there's they definitely are helpful. And so I don't think part of it also, like my experience is that I'm not somebody who goes out and hires the most expensive contractors. And so I've had some in the past that really just screwed things up. And so but I'll always blame the city. And so sometimes it's tough to know really what the problem is. But I also think this, all of my building experience here in San Antonio has been since COVID happened. And so the city office was shut down for a while. They were all working from home, and that slowed things down quite a bit. It also, created issues with materials and labor. I think going forward, I don't think that 2 years is a normal amount of time, and I don't even think 18 months is. But I wouldn't expect to have it done in 3 or 4 months or something like that, which is what my first contractor on my container home was telling me. We can get this done between 3 and 6 months, and that was a couple years ago with this.
Yeah, because I think there like you mentioned before, there's some people with equity, right, that may be exiting a position and now trying to figure out what to do with it, and many people they're just going to be sitting and waiting and waiting to see what happens with the markets. And I've been talking to a lot of people about the markets that are getting pre-approved, or clients or investors, and I think there's just a lot of things that just don't always make sense. Like in 08, 09, it all made sense. Banks made shitty loans, they blew up, people couldn't afford their arms payments, and things fell to the ground. It all made sense. Right now, you've got inflation, you've got home prices going up, you've got rates going up, you've got no inventory. All kinds of buyers are being, kind of pushed out of affordability because they can't afford the payments. You got people sitting on homes that maybe I want to sell, maybe I want to upgrade or downgrade, to a lower size home, but I got a 3% rate, and if I go from 700 to 400, my payment's going to be the exact same because rates are higher, like whatever.
Right.
There's just a lot of weird dynamics going on, and this, just putting people in a lot of uncertainty what to do. And in your market specifically, from an inventory and then prices standpoint, how are things right now as opposed to a year ago or 5 years ago, whatever?
So we have a lot more inventory than a year ago, but we are still, at least. So the way I have a search that I pull up every day that shows how many are available. It's got some filters, but so in 2018, 19, when I would pull that up, it would almost always have about 10,000 homes. When I pulled it up this morning, it had 8,600. So we're still, that by that measure, about 14% down. I don't actually look at a lot of the stuff that gets posted. I like to just pull my stuff in the MLS and pay attention to those numbers. And so I know we're still, from numbers I've heard from other people, closer to 20% down, but from the inventory I care about, it looks like we're about still 14 or 15% down from pre-2020. But we're more than double what we had a year ago at this time. It is, like I said, I'm still listing quite a bit, and my team is as well. And stuff is just selling. Like it sells to, there's a lot of first-time home buyers buying the stuff that I think of as investor type stock. Like I recently, like last week, I closed on a home, 192.5 is what it ended up selling for. It was one I had listed at 200,000, had several offers the first day. We ended up, it got negotiated down because it, had actually pretty serious issues with it. But in that price range, there's a ton of demand, but it's all the people that, it's almost all FHA loans, VA loans, people that couldn't buy properties last year and the year before because there were so many cash buyers. it seems like those are the people that are out just buying stuff now. I mean, one of the agents on my team listed a property last Friday, and it was under contract. She got two offers the day it was listed. Like the first two people that viewed it both put in offers. It was under contract within 2 days, and over the asking price. And it's in the high twos, right? So like anything under our median is in the low threes, and so anything under our median there's still a lot of demand, especially when you get down into the low twos, and anything under two, if it's in a, we don't have a lot that's under two anymore. That's in an area that gets a ton of owner occupants, but that stuff's moving fast. And then the other thing, so because we still have a lot of out of state investors coming here for short term rentals. And so, and we work with a lot of clients looking at those too. And the stuff that's like 4 or 5 bedrooms with a pool, unless it needs a lot of work, those are all just selling incredibly fast because we don't have enough. Everybody that wants one of those wants it to have a pool, and there's just not enough stock of that here. And if you want to buy a home and put a pool in, you're on at least a 6-month waiting list, and you're probably paying, $75,000, $80,000 for a decent one anyway. So those properties, there's still a lot of competition for. We have a hard time picking them up. But if it's in that higher price range, but it doesn't have a pool and there's not some, that's the stuff that's really sitting longer. Or, there's a lot of stuff on the market, that's just building up. That's people that just have really unrealistic expectations. We're not really down far from the peak at all. I think when I looked at global numbers, it looks like it's less than 2%. I'd say in certain parts of town, we're definitely still up. Maybe not from May of last year, but definitely year over year still up. Which is, a lot of the stuff that I look at, I think that we're very much supported because we're a market that investors from all over the place come here. And, I've 80% of my business is out of state investors, and I'm not special in that regard. Like I think, there's a lot of other people that are working with a lot of people from out of state. If you look at, we just have a lot of, from a demographics and jobs numbers and growth, there's a lot of reasons people come here. And because of that, I think that, we've been somewhat insulated price wise, although, that's not great for all my investor clients that want to buy because their rates have doubled. Right. And so, it's taken more. The only thing that really just on the surface still works that I think that's somewhat traditional is just the short-term rentals, but there's still the same type of competition for the good ones that there was last year. I mean, it's really kind of silly how much competition there is for some of that product when you look at everything else that's going on.
Yeah. So if you were to compare this market to, say, a Houston or a Dallas, for the listeners out there that are coming from outside of Texas and maybe even have cash that are looking at just some basic stuff to maybe dig deeper into, how would you describe those markets in basics?
So I don't really follow those markets very closely anymore. I moved to San Antonio in 2018, expecting that. So I've moved a lot I've been in real estate for a while, and I've moved a lot to sort of chase markets. And I picked San Antonio because I wanted a place that I was already expecting a downturn. Now I had to wait a lot longer than I thought, back then, but that was where my mind was at. And I was trying to pick a place that I thought that was going to do very well for the next one. I have a school age child. And so for the first time, I was trying to pick a place where I'd be for at least 12 years, which I've never done before. And so, was looking at Texas markets really caught my attention because they have the growth, and I think all of them do. But San Antonio has historically been a very stable market. We're pretty similar to Houston price wise. One of the things that kept me from going there was they have a much stronger tie to petrochemical industry. And so sometimes that's good for them. I remember in the last downturn, at a certain point, they were still really booming because of oil prices were high. but so it's tied too much to that, and I'm always really concerned about downside more than upside. I really firmly believe if you stay in real estate long enough, you're going to be wealthy. And so my goal is to just always make sure I survive, right? And so when I pick a market, I want a growing market, and so San Antonio really hit that. But we're just very diversified. Like Dallas, it's pricier than ours right now. But what really kept that from being, the one I decided on is they've done a great job over the last decade of really like making themselves, they're trying to brand themselves as the second financial center for the country. They've done a good job of picking up a lot of private equity and banking headquarters and large real estate company headquarters. And that's done great for them while times were good. We haven't seen what that does to them through a downturn. And so for me, I think that's, and especially right now where where what we're experiencing is all tied to banking, I'm feeling really good about that decision, right? Like I don't know, I don't know how that's going to shake out, but to me, it's an added risk. If we have any concentrated industry here in San Antonio, it's military and government. But it really isn't, we also have USAA headquarters, which is a huge employer for us. We have several large schools now. We've got UTSA, which is really large, but also several other schools. There's just there's the HEB headquarters. We just have a really, it's hard to pick one thing that if it went out of business or closed, that we're going to be in a lot of trouble, or even one industry. And so that's one of the things that helps us. We're also, San Antonio is still the most affordable rental market for tenants. Like when you compare what our rents are compared to average household incomes, we're the most affordable of all the major Texas markets.
Mm-hmm.
And I think that's important because, like I said, people come to Texas for rent growth and appreciation, right? Like your long term, you want those two things to grow. And so we're starting from a point where there's still plenty of room to move that. I should have mentioned this up front when you asked, me to introduce myself, but 𝐕𝐈𝐃𝐄𝐿 Properties, even though I'm an agent here, there's only 5 or 6 of us agents. We're primarily a property management company. We manage 1,000 doors in town and we manage short-term rentals. But so like I get a lot of that, insight into, that's the whole reason I'm here, right? Is so that my clients sort of can work with them, because I have a lot of out-of-state clients, but that way off on tangent. But so really get to see how our rent, the rental market here has still been incredibly strong. Where I know that's, there's a lot of places right now where you're seeing falling rents. Sorry, what were we going to say?
No, so I'm sorry. So rents are staying stable and not falling, whereas other markets.
Yeah, I mean, at least across our management portfolio, we're actually still pushing rents in a lot of spots.
Gotcha.
Now we're not pushing them like we were last year. Last year there were a lot of places where you go from 1,500 to 1,750, which is when it was vacant, and that's a huge jump. Normally we're doing much smaller ones. We had a couple of properties in our portfolio that went backwards, but it was like really high end rentals, and for us, anything over 2,500 is pretty high end. Like we had some that had rented for like 3,750, which is an insane number here, and had never rented over 3,000 before that. And so when that came back up, I want to say that one, I don't know, it was one that we talked about, and I think it went for 34, or so we had a couple that gave back.
How big was that one? How many beds?
I mean, it was like a 5-bedroom, 3-bath. Okay. I think it had a pool, a big piece of land. I don't get involved on the management side. Like I'm not doing that on a day-to-day basis, but it is like I'm always talking to them, one, to figure out, stuff like that. I was asking, like, are we, are any of our rents going down? And they're like, no, we're still pushing them. And then they're like, oh, well, we had this one, and so there's been some, but for the most part, we're actually still raising rents on renewals. And in some parts of town, to a pretty surprising, we just had one that was a client of mine that he bought the property from me a couple of years ago, and so those ones I track a little better. And it was one where it was like 1,095 less than 2 years ago when he bought it. We just put it back up for rent for 1,495. I don't know if it rented yet. I actually don't think it did. But I mean, that's a huge move for where we used to have a lot of $1,000 single family home rentals. Now, most of them are going to be 1,500 or more.
Yeah. So a couple things before I forget. I want to talk to you about your Twitter. I want to talk to you about a short-term rental example. And I want to talk to you about another situation about somebody scaling in rentals in your market. So we got a little bit of time, so I want to try to pack this out. So first thing, I just pulled up a random property listing. It's 360 Lula May, San Antonio. It's on the eastern side. It's a 5-bed, 3-bath. It's listed at 350. I used AirDNA, threw in the address, and it's spitting out a projection for about $52,000 of gross rents and short term. Mm-hmm. In your opinion, does that sound like that's in the ballpark? Is that high, low?
I can't picture where that address is. But it is, yeah. I mean, we're very. Does it have a pool or it doesn't have a pool?
It does have a pool. It's a ranch. It does have a pool. 5-bed, 3-bath, 2,200 square feet. It is on the just inside 410 near Highway 10.
On the east side?
On the west, west side of 410.
Oh yeah, no, that I mean
just,
that
just
sounds,
north of, yeah, just inside the Beltway.
That almost sounds low to me for the revenue number. You know, one of the things when we use AirDNA, it doesn't do a good job of, it doesn't differentiate between does it have a pool and it doesn't. Mm-hmm. And so one of the things we often have to do is go back and look and pull comps that actually have pools, and it makes a huge difference here. I mean, it's, you know, most of the time it's at least $100 difference in ADR, which is, you know, ends up being a big revenue difference. That sounds fairly reasonable, right? You said 50 something thousand,
52, yeah.
52 revenue and 350,000 asking price. You know, normally I'd want closer to 70,000 asking price, or 70,000 revenue for that asking price, unless we thought maybe we could go in and get a little bit of a discount or something. Or if maybe, you know, maybe they're throwing in some furniture or something like that. I want it to be a little bit better deal on the surface than that. But you know, we're really trying to do 20% revenue to price. Although if we get into the high teens, I'm pretty happy with it. And for the most part, those seem to be working for our clients when the numbers get there. You know, it's most of the time we're having to find ones that we need to do a little work in order to make those, you know, to find them like that. But I mean, that, yeah, it sounds perfectly reasonable. But I'd want one that's a little better than that to be excited about it.
So the part of the reason why I want to kind of bring up a couple of these examples in depth is because there may be a listener out there that just wants to poke around and just check out the market and have maybe a conversation and dig deeper and see if something in your market could make sense for their portfolio, right?
Right.
And so with your background on all the different facets that we've already talked about, I think it's important if someone's going to go purchase a rental property or build a portfolio, it doesn't matter if you're experienced or not experienced, having a realtor that knows the game, knows what to look for, what not to look for in terms of the investment side, I think is important as opposed to a realtor who doesn't get that or isn't an investor themselves.
Right. No, I completely agree with you there. You know, I actually have a couple of very loyal clients that started off with agents that sold them terrible properties. And I spend a lot of time discouraging people from buying certain properties because there's a lot more things that, especially with a short-term rental, there's a lot more things that can go wrong than what's going to go right? Like you're probably not beating your projections by a whole bunch, but you could fall way short if you pick a couple of things that go wrong. So I completely agree with you there.
So one of the things that we talk about on this channel is, I call this the stair step method, and somebody may call something different, I don't know. But it's the concept of, okay, you purchase a property, ideally, in the earlier part of your journey, we've got more time on your hands. And, you know, I talk about this right now, especially because there's data that came out recently from National Association of Realtors that the average age of a first-time home buyer is 36. And, you know, just a few years ago, it was in the late 20s, 28, whatever it was. And so it's a big difference. And again, this data, I think, is very recently recent data. And so what if somebody's 25, they can get into the game and buy a property in the low end, 150, 200, whatever that number ends up being. Well, if they have their sights on building a portfolio of real estate and maybe even getting out of the rat race 20 years down the road or whatever it is, you know, they have a 10-year head start on that person that gets in at 36. And imagine what can happen in a 10-year head start. And the example that I put out there on some of my platforms and also a podcast episode is I have this like very simple example where you buy a house for 150, live in it for 2 years, save up, buy the next one for 250, and then turn the old one into a rental. And then 2 years later, save up again, buy the next one for 350, old one into a rental, do it again at 450. And when you fast forward the clock 30 years, that's going to be a $3 million portfolio. And if you put 5% down on each one, that's 60 grand of down payment money. And after 10 years, that's a portfolio that's worth 1.5, 1.8, depending on whatever assumptions you make of appreciation or whatever. Right. So in this market, do you think that somebody 25, right here, right now, if they had the long-term in mind, that they could execute something along those lines and just stair-stepping their way up?
Yeah, I absolutely do. One of the things when I was talking about what was working, I failed to mention house hacking, but I've had a couple clients that have done some interesting house hacks here in town, using where they're buying a home and using it as a short-term rental. And I got two examples, and hopefully I don't go over your time, but I think they're both kind of interesting.
I have time. If you have time, I have time.
Okay, great.
If you're good.
The first one he bought, it was a big home, and it was a stretch for his income to qualify for it. But he used a low down payment program, so it wasn't a lot of money. And it had like a little. It wasn't exactly a pool house because it was attached to the home, but it was like off the garage and like a little suite. And but it was, other than that, it was a big, nice home with a pool that most people would have just bought purely as a short-term rental. But he bought that. He's living in that little, basically pool house, short-term rentaling the rest of it for really good money. That's an opportunity. I've actually had a couple clients do that over the last year, where they're living in some portion of the house, and because of the way our short-term rental rules work here, they can do that and get away with it, where they couldn't really rent it as two separate units on regular rental. So that's one where I think there's it takes more work and really digging and finding those properties, but that's one thing that I thought was pretty interesting. The other, I had a young lady buy a property for me where it was her first home move, or her first property moving out of her home, and so she actually goes back and stays with her parents or stays with her friends on the weekends, and she just rents it out Thursday, Friday, or Friday, Saturday, Sunday, makes a ton of, because those are the big days anyway.
Yeah.
And then she moves. So that was one of the more interesting short-term rental house hacks I saw. And I think, again, she did put very little down and used some sort of grant when she did it. And so it was very little out of her pocket. She financed the furnishings, and just made it. It was really interesting. It was her idea. I had never heard of doing that. But even I think you could probably pick 10 weekends out of our year, and if they're the right time, make a huge dent in your mortgage and go and do that, and then you already have it set up to move into the next one. So I definitely think there's an opportunity here. It takes a little more creativity, right? Because I think if you just bought a home today, if I wouldn't be able to count on 2 years from now moving out and renting it as a traditional rental. Maybe if we have more rent growth and interest rates go down and they refinance, but I really don't like people, buying something for a maybe. Now, if it's a home that they're happy to live in for 5 years before they move out and rent it because something went wrong and rates didn't go down or rents didn't go up, as long as they can afford it long run, I still think you're better off getting in now than just waiting. I think people have been talking about 6 months from now for the last 3 years. It's something that I actually heard a lot in the 2007, 8, 9, 10 timeframe. I remember at that point in time, everybody was like, "Oh, this is going to be all over in 6 months." Like, for some reason, that's like a magic number for people, right? You'll hear that more than anything. I just want to wait 6 months, and then it's going to be the time. And I think, especially if it's a home that you can afford, and you're going to move into it and then move out and do something with it, it's tough to get really hurt that way.
Yeah. What about multifamily properties?
Our multifamily still has a ton of competition on the buy side. I think, again, if you're going to house hack, you're going to move into, maybe some of our older stock. You can make it. You're definitely not cash flowing. You're probably going to be able to do it and lower your monthly expenses. especially if you're moving to one and rent out the others. But it is something that as a pure investment today, it's tough to buy multifamilies, with an investment loan and really make them work. The ones that I see still buying are mostly, either very low leverage or they're using cash. But inexplicably, they're still they're still selling well. I mean, we haven't seen really much softness at all. Although our our inventory for that has come back up to just about where it was pre-COVID. So that inventory has come back where it was down quite a bit a year ago, and now it's slowly coming back. But a lot of it, I think, it's building back as sort of like the kind of trash properties that have just been sitting there. Like we just have a lot that have been sitting on the market a long time, and the stuff that is even close to being priced well and is in good condition is going quickly still.
Yeah, and that's the thing. Yeah, you have the properties that just sit out there for ages and just no one, they don't budge on price and they just sit there. And it's like, what's your plan? What's your goal? It's just gonna sit there. You're not gonna budge on anything.
Right.
No one's gonna scoop it up.
Yeah, and I mean, we try, like, we put out a lot of low offers on stuff like that, and sometimes they work, right? Like, I mean, I've been surprised at some of the discounts that we've been able to get on properties, over the last 6 or 8 months. But they're certainly not discounts in the asking prices, right? Like you just have to be out there poking a lot of the sellers and seeing who's actually going to give you something.
So, from a social media standpoint, you mentioned being active on Twitter. And one of the things that I've talked about a lot is that on the mortgage side of things, I mean, social media is terrible because people in our industry are just talking about rates and market updates and blah, blah. It's all the same. It's all the same shit. And so like,
right.
You're not doing anything to differentiate yourself. But on the real estate side of things, it's a little bit of a different game because on your traditional social media, maybe Instagram, maybe Facebook, you have something to be able to show somebody. Everyone wants to see the beautiful house and the pool and the whatever. So it's a little bit of a different game. And even in one of my presentations talking about this in front of realtors and lenders, I actually had an example where I said, hey, type in mortgage into your search on Instagram. And like every single person on the top of that search, we're all realtors. There's no mortgage people on top.
Interesting.
But that's for a different part of the conversation. When we talk about Twitter, you're out there active. You've got a good following. People are engaging. Good engagement on there. What advice or what's your plan? What's your purpose out there with your game?
So, and this is going to sound sort of terrible. So. But I said I really focus on one at a time. Before I got more focused on Twitter last year, I was posting mostly on BiggerPockets. I got to a point where I got too many leads and too much outreach from there that I couldn't handle it all. And I haven't mentioned this yet, but I'm actually I have a chronic disease, so I don't work crazy hours like a lot of people do in this industry. And so I really just got to a point where I had more leads than I could handle. So I stopped posting looking for more business and tried to start recruiting a couple of agents, which I have since done. And I still actually, that's my main focus right now is to pick up a couple more agents because we still get, a lot of investors coming in. So I switched over to Twitter. I had always had a Twitter account, but I hadn't used it much. I had no luck trying to recruit agents from BiggerPockets. And I think it's because it's a place where all the agents that are on there, they already sort of know the investment business. I mean, that's why they're there, or at least, they think they do a lot. That's terrible. But I wanted to get a couple that I trained in the investment side, looking at deals the way I do, which is, I think, with a little bit more of a skeptical lens. And so that was actually my motivation when I switched over to Twitter. I didn't really think I'd get a ton of business from it. I don't know why. It just never seemed like the spot to do it. But there's a lot of times throughout the day where I'm in between phone calls or sitting in the car waiting for something. I maybe drove to a property and I'm waiting. And so I am on there quite a bit. And I just started getting business from it again. And I was like, oh, well, that's sort of interesting. And so, I don't have a great plan or a goal or it started off more than anything as a procrastination tool while I'm sitting there. And I really like to meet local, people that are local, and go get an ice cream or a coffee or something. And there's an ice cream place right across from my house that I love. But it is I don't have some great amazing plan, but I've been able to grow pretty fast, really just, trying to answer questions honestly. You mentioned I like to call people. I do sometimes. I think there's a lot of misinformation. I hate to see people buy stuff that they're going to lose money on. And it's not like I've never sold a deal that didn't work out exactly. There's a fourplex or two that I can think of that didn't go as well as I had hoped for somebody. But I'm very much trying to protect people's downside. And so when you see people out there just really pitching the unicorns and rainbows, I just don't like to see that. But yeah, I found, I end up making a lot of good connections, other investors, other agents, just random business people in town. And one of the benefits, I think, for Twitter, doing any sort of location specific stuff is really difficult. But, I'm in a market where people invest from all over the country and all over the world, really, and come and buy here. And so that doesn't matter to me that I can't, I can't like target a local group like you could on Facebook or something like that. But yeah, so honestly, it's a lot of fun, and it's not. I don't really have a great agenda, but it's I honestly think, like, if you're out there talking about real estate, sharing your knowledge, I'm really just about people being attracted to that, and coming and wanting to work with me. I'm not somebody that's in people's DMs constantly, or I don't do any cold calls or spam or anything like that. I think that the more you're just out there, there's people on Twitter all the time asking questions about real estate, and I try to answer honestly, or really, I like to try. I do spend a lot of time like trying to tell people, no, you should hire an attorney to look at that. No, especially like creative finance options and stuff. I know a lot of retweet, they don't really like that, but I don't know. That's unfortunately, I guess my plan is I don't really have a good plan, but I just put the time in regularly.
So posting versus engaging with other people, answering questions, like what percentage would you say you spend, let's just say number of posts,
Yeah.
posts versus replies?
I mean, if I post once a day, that's a lot. I'm probably post once or twice a day where I'm actually making a post. But I would guess I reply to 30 or 40 people every day. I mean, I'm much more heavily in the replies. I did, talking about being a little bit intentional. I joined a Twitter gang. I don't know what they call them, like, but like it's a group of people that talk to each other on. I had to download the app. I can't think of what it
Telegram.
is. Yeah, on Telegram. So it's a little group on there. We've got like 6 or 7 people that post and then try to promote each other. I don't know. I've always been sort of suspect of that, but they were people they're all posting stuff that I'm like, oh, it's legitimate, real estate people. And so they'll, in that group, we try to post one that people share once a day. So that's got me to actually try to make a post every day. But I'm definitely the stereotypical reply guy, where I'm just like jumping on people's stuff, and I don't know. I find that I'm not great at just like coming up with something, and especially because you get the ideas when you're dealing with a deal, but then I have to save them because I don't want to put my deal out there until it's done, right? Like,
yeah,
it is surprising to see how many people are actually just out there listening. I have a client that I've worked with for a long time, and I didn't realize, like, he's been following me on there, and he just never says anything, and glad I never brought up any of his deals in any sort of negative light, but I'm sure there are others out there.
Any accounts that you would say, like, hey, this person's out there really putting on some good content in the space?
Yeah, I wish I had one off the top of my head, but I just don't. I mean, I follow a ton of people.
Who do you have the most fun engaging with?
Yeah, so I don't know, like,
putting you on the spot here.
There's a couple of people that do some really good hard money content. One of them is Drew, and I don't know his handle. This is terrible. I don't know anybody's. I remember everybody.
Drew, is he the guy that's in Nebraska? That's like a university student that does like rentals and stuff like that?
No.
Okay.
I think his name is Drew, but so he's somebody that like he's like the college landlord. He's somebody.
Yeah.
He's actually in my gang, just so you know.
No
Full
shit.
disclosure. Yeah.
Cool. Yeah. That's awesome.
But no, it's a maybe it's not. Maybe it's like anyway. I don't know anybody's handle. I remember them all by their picture.
Okay.
And so then I get really thrown off when like people change their picture. So don't ever change your picture, please. That's why, like, I always, when I try to, whenever I'm doing stuff like this, wear the same shirt that I have in my profile picture. It's
That's
getting pretty
cool.
worn out now. The same hat too. So, I want people to actually recognize me. But
I mean, I
I'm
thought you just
terrible with
put
that.
like masking tape on that shirt for a second there, but it's okay. Um, you mentioned ice cream, so I'm an ice cream connoisseur.
Oh yeah.
So like, what's your go-to? Like,
So
what type of thing do you get?
yeah. So it's a little place called Bean Ice Cream that's on Broadway in San Antonio. It's right across from where I live, and they have she makes it all there. She's got a bunch of different flavors, but she does a lot of different honey flavored ice creams. Where she like
Mm.
cooks the honey and it's almost like caramel, like it's
Oh, ooh.
and it's really good. And then she does like a honey dust on top, where she makes like a honey candy and grinds it and puts it on top. So I like a lot of her honey flavored ones. And then usually I'm like a mint chip guy at like a regular place. But because of like the real freshness of it, her strawberry is really good too. So like I'll eat
Okay.
strawberry ice cream. Um, but yeah, normally like my go-to at like a chain is going to be mint chip.
Very cool. Very cool. What about your an attorney recommendation? Would you want to put a name out there for somebody that seller financing, that kind of stuff? Do you want to throw it?
So,
Yes or no?
I mean, I really like my attorney here in town. I think he makes sense for someone local. His name's Michael V. Malone. I recommend him to all kinds of people, so I don't mind putting him out there. He is a solo practitioner, so I honestly think that there's been times where I've referred too many people to him and gotten him a bit a bit busy. But I don't know that that's actually the case, but it's felt like it on occasion. I really like him. I use him for um, just for real estate related stuff, but because I'm a former attorney, I'm pretty picky with attorneys, and I feel like you can get someone. It's kind of just like contractors, right? You can get someone who's really good, or really cheap, or really fast, and you can pick two, right? Like affordable or good, but I feel like he's very affordable for how knowledgeable he is. He's real knowledgeable. And the speed is just you have to work on his schedule, right? So like I have him set up my I always have an open LLC series waiting for the next deal instead of having him try to jump on ones, that sort of thing. But yeah, I like him a lot.
So I don't want to take up too much of your time, but two more questions for you.
All right.
So for a first-time home buyer right now, what's the biggest mistake or biggest advice that you would try to pass on to that person navigating in your market?
Yeah. And again, like I really only work with investors. So the only time I'm working with like first time home buyers, like that it's a true, like that can use those programs is if they're house hacking. And honestly, I think it makes sense for most first time home buyers, right? Like I think it makes sense to buy a home. My biggest thing is I want it to be something that you can easily afford, right? Like don't just say, okay, my pre-approval is X, that's my budget. Like for some people that's going to be true, but for some people that, depending on what their lifestyle is like, they need to have that, pre-approval number minus another 20% for that to be a property that makes sense for them, right? And so that's the biggest thing is like, you have a long time to get into the dream home. And I think that it makes sense to start with something my very first one was a duplex in a very rental heavy area, and it really set me up to move out of that and rent it out. And I think it doesn't have to be multifamily, but to buy something with an eye towards can I rent this out when I move instead of trying to have to sell it, I think just makes more sense. I think in the long run you're going to be much better off if you do that than if just pick the home that is you just that you're emotionally drawn to. I think doesn't make a ton of sense.
And then
That
the
is why
same,
I don't work with normal home buyers and only investors because I have a very hard time with the emotional side of the business, and so I just try to avoid that altogether.
I mean, that makes sense. Same question for an investor locally or coming from out of state. What type of advice would you give to them in this
Uh,
market right now?
Today, I think you're only getting a deal if you make a lot of offers. I think that prices are tough, right? And people aren't moving them down, but there are panicked sellers out there who are giving people good deals. You just have to find them. And so, one, you have to have a model that's working. And the biggest one that I see is short-term rentals right now. But even in that model, you need to be out there making offers regularly if you really want a good deal. And they're happening. I mean, people are giving big concessions or, big price drops if it's a property that's sat for a little bit. But it's a market where it takes some work, and you can't be afraid to come in with low offers.
Cool. Any other thoughts, advice that you want to throw out there?
I would, the one thing I think is really important, there's a lot of people pushing a lot of different creative financing deals, and I love them. Like my first 14 units, I put $0 down. First I bought a duplex, then a single family home, then 10 units, then another single family home, stack those all up without putting a single dollar in down payment. So I'm for creative financing, but I wouldn't do it without talking to your CPA and your attorney first, because there's a lot of people putting out what I think is just wrong info. I actually know more than one person that went to jail after the last downturn because of, one of them was someone who was pitching their course at the local REI on, how to work with private lenders. And there's just so many ways you can get in trouble. And what works in one state might not work somewhere else. And so I think, I just wouldn't do, if you can't afford to pay an attorney to look at your deal and to have your CPA check your deal, it's not a good enough deal, right? Like, so I'd be, just encourage people to be really careful with a lot of the creative, ways of buying stuff. Because a lot of people are just downplaying the risky, the risks. And I don't think a lot of it's intentional. I think people don't really understand that maybe a deal that works for them and is structured right for their state might not fly in another state. I mean, there's a lot of state level consumer protection rules around this stuff that you could find out that you've been paying on. I actually knew someone that this happened to. They had been paying on a contract for deed for years, and it turned out that they didn't have it wasn't enforceable when they got to their last payment, and it was just they had used some form that was just like didn't work where they were.
Gotcha. Do you feel like this is an opportunity, a better opportunity right now to go find a seller financing deal, creative deal than 2 years ago?
Well, absolutely, right? Like, I mean, if properties are sitting on the market longer, I mean, there's definitely more opportunity to do it. And I think it's a perfectly good thing to do. I think it just has to be done. I just think you have to have proper counsel, and I think you should do it before you go out. There's a lot. I just was talking to a young investor the other day, and they're just out there making offers, and they have like this template email they want you to pass along that more than one of them has had the same one. So there's like somebody out there, selling this system, and it's like, I'm harping on the be careful and don't the negative side of it. But yeah, I do think there's opportunities to do these deals today. Me personally, I'd focus most on sellers that have a completely free and clear property. So you're not worrying about dealing with the existing mortgage in any way. Not that there's not ways to do that, but I think it's the cleanest way. And I think a surprising number of people own properties free and clear. And so, if there's stuff that's sitting on the market, and I think some of those sellers are going to be open to those deals.
Cool. All right. Last thing. What's one goal you're trying to be able to accomplish this year?
Okay. I want to recruit 2 more agents.
2 more agents.
Yeah, I've got just 2 on my team. I want 2 more. We definitely get a lot more people coming to us for help than we're really able to. And so, yeah, 2 more agents I think would round out my team perfectly. People this is what makes it really tough is I talk to a lot of agents. I think you can tell from talking to me that I really, my biggest concern is the downside of real estate, right? And trying to protect that. And it's hard to find agents with that same outlook, right? Because a lot of times that means I'm killing a deal that could pay me a commission, right? And and I think and it's not that I'm just like so selfless or something. I honestly believe that killing those deals early on, making sure that your clients buy a good deal, is what's going to get you the good deal. Get those more than 50% of my business is repeat business. That would never happen if I'm just selling them any old deal that, that comes across. And so trying to find, agents that, are willing to really look at, is this a good deal for the client first, has been surprisingly hard. The two that I have are both excellent. One of them is on Twitter, and that should have been my recommendation. You should follow her too. It's Tiffany Figueroa. But I don't
Can you
actually
spell
know
the
what
last
her
name?
handle is.
Can you spell the last name?
𝐕𝐈𝐃𝐄𝐒ROA, I believe.
Okay. That sounds right.
It's like T figures RE or something like that is her handle, maybe. But yeah, no. So her and another agent, and they're both very good about looking out for clients in the same way I like to. I'd like to find two more. It's surprisingly tough. A lot of people really just have that short-term outlook of, I just want you to, you like this deal, let's buy it, right? And not like, let's go through and see, are there reasons maybe we should find a different deal.
Cool. Yeah. From a 2023 standpoint, I mean, who knows what the hell is going to happen this year? A lot of things are probably going to change, or maybe not. I don't know. Rates up or down, market prices up or down, but people are still buying and selling. People are still doing stuff. Just got to find the right deal for you. And then later in the year, we'll have to catch back up with you again, or maybe whenever, and check it on the market, check on your goal, and see what else is going on in your world. But yeah, thank you so much for taking time out of your day. A lot of information, a lot of good stuff to be able to for listeners to carry with them as they are navigating these markets.
Well, thanks for having me. It's been a lot of fun.
Absolutely. Thanks, Joseph. Have a good day.
You too.